Beautiful. All right. Then let's take this thing. Welcome to the very first installment of Spartalk News, where we stay fresh on events and talk about sex, politics, and religion from a working class perspective. As always, I'm your moderator, Spartalknewztalk, Jack Dalton, and I'd like to start by introducing everyone to our current co-host and producer, Haakim Dream Walker. Welcome to the air, Dream.
Well, Jack, thank you for having me. Thank you, show. Gonna get one in.
How you doing today? How was your day?
It's been amazing. It's been sunny for the first time in a long time in Detroit, so you can never be mad at that. So,
hell yeah. Haakim and I have been working for a while on improving the show and putting together a full panel on an episode we're calling "What Is Capitalism." It's to mirror the "What Is Socialism" episode of the first season, especially in the COVID era, the bailout era. Capitalism and the meaning seems more elusive every day. And in the course of planning, we decided why not, post news segments while we do that planning, and then we can talk about it on air, get feedback from the guests, get feedback from the audience, and be informed on the news in the day. Depending on that upkeep, the editing schedule, we could do this potentially every week, every other week. We'll see. We're still figuring out a lot here ourselves, so bear with us. I'll hopefully get this out tomorrow, but today is Wednesday, February 24th, 2021, and today in the news, Johnson & Johnson's vaccine is 66.1% effective, according to the FDA, and could soon be granted emergency use. COVID deaths in the U.S. have surpassed 500,000, according to Johns Hopkins University. Tiger Woods is undergoing surgeries for multiple leg injuries sustained in a car wreck yesterday. Authorities describe him as lucid and calm and not impaired after the wreck. Almost a week after freezing temperatures overwhelmed Texas's power grid, almost all of Texas has power back, and temperatures will be 79 degrees and sunny as of tomorrow. And then we got New York Governor Andrew Cuomo, who has been accused of creating a culture of sexual harassment and bullying within his administration by a former aide, which is so pervasive that, quote, it is not only condoned, but expected. He's accused of kissing the aide on the lips without her consent and without her consent and asking her to play strip poker. Didn't pay anybody, which is not better. I mean, but it's we'll see. I mean, it's not better because I mean you presumably want to be paid if
You always listen when there's money involved. There's I think.
I'm just saying.
Offered.
If you're walking away, well, she'd probably have to do an NDA. So I guess it is better. This on the heels of accusations that he intimidated officials and quashed investigation into his administration's misreporting of nursing home deaths during the height of the pandemic there. Cuomo denies all allegations. What's your take on?
First of all, if you're a New Yorker, you don't intimidate officials, you're not a real New Yorker. It's almost a standard.
It's a bold take. It's a bold take. Yeah. All New Yorkers get a pass for
corruption, mafia style tactics. That's how.
But not sexual harassment. You're not.
No, I'm not pro sexual harassment. If that's what you're implying.
You've heard it here first. Dreamwalker, not for sexual harassment. Our guest today, Carson Sangala, is a realtor and amateur trader during a time when larger hedge funds are clashing financially and legally with individual investors in the value of GameStop stock, for instance.
Yep.
We thought we'd bring him on to give some insight on the current economic climate. Welcome to the show, Carson.
Thank you. Thank you for having me on.
So I was referred to you by Tom Elliott, who was on the first. He's a friend of yours, right?
Yes. Pretty good friend of mine.
So he was a friend. He was on our first season on the fascism and Satanism episode, and he's definitely of the left. You said you were somewhat affected by the Robinhood app halting buys and allowing sales on the GameStop stock on January 28th. And I see you posting about this stuff quite a bit.
Yes.
And I feel like a lot of people, most people were saying that everybody was affected by them doing that in general.
Yeah.
But first off, according to you, what happened here and how were you affected?
Yeah. So, well, as far as how I was affected was thankfully to a pretty minimal degree. So I have to kind of roll it a little bit back to the beginning of before I got in on the action with GameStop. So, and we can get a little bit more into detail on the backstory later if it's relevant. But basically what happened with GameStop was there was a Reddit user by the name of, can I curse on the show?
Yeah, feel free.
Okay. His username was Deep Fucking Value and his YouTube channel was Roaring Kitty. And he was doing a lot of what we call fundamental analysis of a stock, which is looking at the underlying asset of, how much revenue are they making relative to expenses, how much cash do they have on the balance sheet, all that sort of stuff, looking at the actual value of it. And he realized, hey, this stock is trading way below value. And so he started making videos and Reddit posts talking about it. And a lot of people started piling onto it. And it went up from, I think it was trading the 52-week low point was around $2.50 a share. And it started climbing up to around $20 a share. So, I mean, that's already close to a tenfold increase. That was huge. And so a lot of these short sellers, primarily Melvin Capital and Citron, they said, this is getting out of hand. Maybe it was undervalued at $2 a share, but $20, it's not going to stay that high. So they started short selling it. And a lot of people, they were saying, hey, these guys are all shorting it. But, when you do the fundamentals, I mean, $20 a share isn't that bad. And Citron was actually the first guys accused of doing some securities manipulation, where it was actually the day before the election. They talked about how they were going to do a live stream of them trading and shorting GameStop, and they ended up canceling the live stream, and the stock went from around $20 a share up to 30. And so they had massive losses on their shorts. And anyway, at this point, that's when I started talking about it and posting about it. And I thought, $30 a share, that broke everyone's expectations for what GameStop was supposed to hit. I thought, what? It's too late to get in on this trade. I'm just going to watch it and commentate on it. Once it started going up to 100, 200, 300, that's when I decided, what? I'm going to get in on this. This is a short squeeze. That's when the growth of the stock is really going to go, parabolic. It's going to have some crazy exponential growth. And so I did get into it around 250 a share, and this was just before they halted trading. So, I could have liquidated my shares still because they were allowing us to sell, but I didn't want to do that. Had they not halted trading, there was still shorts that needed to be covered. There was, projections of the stock realistically going even higher than it did. However, not only was it GameStop that they halted trading on, there were several other securities that were very popular in retail trading message boards, Wall Street Bets, and similar websites to that they also decided to stop trading on and saying, hey, you can liquidate your position, you can sell to get out, but you can't buy anymore.
And were you part of Robinhood or are doing this trading through Robinhood at the time, or a part of an app that was following their lead?
Mm-hmm. Yeah, so I was using both Robinhood and E-Trade, and both of them did have restrictions on it. I was doing more of it through Robinhood at the time, as a matter of fact. And AMC, GameStop, and Sundial all of which I had open positions in. GameStop was the last one I got an open position in, and I did end up liquidating it when I had the chance, because once they said no one could buy in, I didn't want to still be holding on to it. But had they not done that, I probably would have held in longer. One of the other companies that I would say this was probably the one that really got to me the most was when they halted the trading on Sundial. So that was a medical cannabis company. And under the past 4 years of politics, cannabis companies did not do too great in the stock market. There was a lot of doubt about legislation being favorable to them. And with the change in administration, a lot of cannabis companies really start to take off. And a lot of them that were 5 years ago, back in 2015, 2016, were doing really good. They tanked down for the past 4 years. That was one of the companies I was looking at, and I was saying, as long as legislation becomes more favorable, this is one that's going to go up. It's going to have a recovery. It's a bit of a gamble to say for sure whether or not, but you look at the fundamentals, it's a very good chance. And even if, we had another 4 years of of lawmaking that was not favorable to them, I think that the general flow of history will be more favorable. And that one, I did even I had several options contracts that I was trying to buy in. So an options contract is similar to buying a stock, but it's what we call a derivative. So it's a security whose price is derived from the price of the asset you're trading. And I was trying to buy in more and increase my position. And they actually canceled several of the contracts I had put in orders for because they didn't want people to be buying more of it. And had I been able to buy them, I could have made a significant profit off that trade.
Okay, so you were directly screwed out of that.
Yes.
Like, yes.
Mm-hmm.
So do you feel that this was market manipulation? And if so, why?
Yeah, so absolutely it was market manipulation, and there's a couple layers to it, and trying to figure out exactly who was behind it. Was it Robinhood? Was it Citadel? Was it someone else? But the bottom line is
because their position was that it was inflated based on these Reddit posts
mm-hmm.
and stuff, and they were trying to protect investors, is my understanding. To tell me why they're wrong.
Yeah, so the way pricing works in the stock market is it's supply and demand. The more people trying to buy a security, the higher the price will go. The more people selling it, the lower the price will go. And so anyway, allowing only one of those activities to take place will allow the stock to only travel in that direction. So if people can only buy the stock, it'll only go up because there's no one to sell it to them. So people would just bid more and more to get whatever's available. However, in this case, they restricted all buying and just allowed people to sell it. And so not only did that cause the stock to shift down, but the way they did it, they sent messages to your account, which there's all kinds of crazy alerts you got on Robinhood saying, be careful with this security. There's unusual activity, high volatility. So they were not only doing something that would cause the price to only go down, but they were trying to encourage people to sell it and get them to panic sell it, to get them to panic sell it and drive it down even faster. Which that in and of itself could be market manipulation, but allowing people to only exit a position and not enter it, it also begs the question of, if I can't buy this, but I'm selling it, who's buying it when I sell it?
And this isn't something that they would probably you would have imagined being possible when you bought into, what is it, E-Trade and Robinhood, right?
Correct.
Right. So it's somewhat fraudulent as well.
Yeah, it's very blatantly illegal. I mean, there are class action lawsuits going on against them right now. I haven't had a chance to watch all the courtroom videos for it. However, so far, not a lot has been cleared up with what was going on. But one conclusion we can make is, if none of the retail customers on Robinhood can purchase it, but people are still selling it, the only people who can buy it is Robinhood's market maker or clearinghouse, which was Citadel. Citadel also was one of the primary investors in Melvin Capital. Of course, Melvin Capital was the hedge fund that was shorting it more than anyone else was. So, that's a very obvious conflict of interest, which is very, very common in the stock market. You see that a lot. It happens a lot. And most of the time, it's not even illegal. In this case, it's a little bit gray area. Hopefully we'll get some resolution. But I mean, just the conclusions you can draw on your own that Robinhood's market maker and the hedge fund that was shorting it were connected. You could see that they had a lot of incentive to drive the price down.
Yeah, Carson, we were going to ask you about, you kind of touched on it a little bit, about the congressional testimony and the class action lawsuits against Keith Gill and aka Roaring Kitty. What's your take on that? What's your thoughts on that whole process?
Yeah, so as far as Roaring Kitty or deep fucking value, I don't think he necessarily did anything that could be considered market manipulation, because when he was looking at it, he did a lot of very long, in-depth videos just talking about the fundamentals of it. Saying, hey, this looks like a good opportunity. He wasn't saying, hey, let's all pile into this and then dump it. He was saying, this is something that could be a serious investment to hold on to for the next 5-10 years. GameStop was making some pretty significant changes to their board of directors. They were bringing in some people who had a lot of experience in e-commerce, like Ryan Cohen, who previously worked for the website Chewy. They also had someone who was previously on the board of directors for Nintendo of America. So they're making some pretty big shifts, as well as being significantly undervalued. And what I understand from the lawsuit, the person who sued him, so the court case where he is actually facing charges and not just testifying, was actually a individual investor in Washington who I believe the lawsuit claimed he lost about $200,000 short selling GameStop, and he claims that Roaring Kitty drove up the price in a pump and dump and should be responsible for covering his losses. I very much doubt that lawsuit will go anywhere.
He's got a class action against him, right?
Yes, class
as well.
action.
Yeah, right. But you don't know, like, are those all hedge fund people, or what do you know anything about that?
So that was just a private
It's in
individual.
Massachusetts, I know.
Yeah.
Yeah. But like class action usually is multiple individuals joining in to being like victimized by. So I don't know if those are all.
So I would have to go and read in a little bit more. A lot of it is very recent, within the past couple of days. So some of it's kind of gone past me without getting a chance to catch up on it. However, I don't believe that it's any of the hedge funds taking action against Roaring Kitty. I do know that the SEC said they were going to look into internet activity connected with stock trading. So they're going to look into the more prominent members of Wall Street Bets, as well as Roaring Kitty's YouTube channel. I don't know what charges in that case have been brought against him. However, from what I understand, it's still very much in the early stages of gathering information and seeing what they even want to bring against him.
So you're a real estate agent as well, yes?
That is correct.
And so let's take a zoom out a little bit. How has the global pandemic affected Realty right now?
Yeah, so it has affected it in a lot of ways. And, depending on how far back in the pandemic, you can see a lot of, you can look at a chart of, sales prices and what we call months of inventory, and you can see exactly what happened in the pandemic and see how it correlated. So if we go back to March and April, as of 2019, we're already in a pretty strong seller's market for real estate, and the way we measure whether we're in a buyer's versus a seller's market is what we call months of inventory. What months of inventory means is if no new homes were to come onto the market, how many months at the rate buyers are buying homes right now, how long would it take for all the homes on the market to be bought? So 6 months of inventory is considered a balanced market. More than 6 months of inventory means there are more sellers than buyers, so it becomes a buyer's market. And then less than 6 months of inventory is a very strong seller's market, or seller's market. And once you further and further down, so say around 3 months of inventory, that would be a really strong seller's market, which is how things were looking in 2019. We started at just above 3 months of inventory, dipped down to around 2.5 for most of the year. And then a lot of people were getting worried, saying, hey, housing prices are really high. We don't have a lot of inventory. A lot of people were expecting a crash just before coronavirus happened. Now, obviously, none of us have a crystal ball. We can't predict for sure if the market's going to go up or down. But just based off of historic trends and expansion and contraction in economic markets, it looked reasonable to assume there would be a decrease in price. And then the shutdown happened. And this brings us to late March, early April, when everything was shut down. Realtors were not allowed to meet in person. We were not allowed to show homes in person. So just about everything had to be bought and sold sight unseen. And we can see here that we went from, in March of 2020, went from 2.25 months of inventory up to 4 months of inventory in April. This was not caused by more sellers entering the market. It was caused by more buyers leaving the market because it became more difficult for them to purchase homes. So with increased supply and decreased demand, housing prices dropped.
And then do you see like the eviction moratorium contributing to this? And how do you feel about the eviction moratorium?
That is a
And I should put quotation marks because state to state, this can be very dicey.
Yeah, that is a great question. I think before I can get into that, there is one thing I should conclude with on the months of inventory. So April went up to 4 months. Restrictions, and a lot of people thought, this is the catalyst that's going to cause the shift in the market. We're going to see a downturn. However, as soon as realtors were able to do business again and in-person showings, everything reversed, and we went into even stronger of a seller's market. So June and July, we were down to 1.9 months of inventory. And then we hit our low point in, I believe it was November, which got it up here on the chart. It's just above 1 month of inventory. So 1 month of inventory in November, that's unheard of. So what coronavirus ended up doing to the real estate market is at first it caused a downturn, and then as soon as people were able to buy homes again, it drove up housing prices to just unheard of heights. Very few homes are not selling in today's market, and many of them are getting over asking price.
So I'm sorry, did you want to talk about the eviction moratorium or at all?
Yeah, we can talk about it. So, I think in my non-professional opinion, just my opinion as a human, I think, with people being unable to work, whether you're a homeowner worried about your home getting repossessed or a renter worrying about getting kicked out by your landlord, honestly, I don't think anyone should be getting kicked out of their home right now. I just think that's ridiculous. I mean, people don't have the ability to work. People are having difficulty getting unemployment on time. And, if you're a landlord and your mortgage payments are getting suspended, why does it matter if you're not getting rent? Because you don't have to pay anything to the bank right now.
Is there mortgage suspension right now too?
There are in some states. It's been going on and off for how long? Some banks, some private banks are just doing it on their own call. They're saying, hey, we'll suspend mortgage payments. Other states have done it. So as far as where we're at right now, it's going to depend where you are. But
Because obviously there's,
Mhm.
you know, like I have heard about some mortgage suspension, but if there's mortgage suspension and then after a year or whatever you owe two years or something like that, that doesn't do you much good yet, right? Because then you have to, you know, you could potentially do a moratorium on rents, but then you'd need 2 years rent, you know, essentially. So after a year of no earnings from your renter, for instance.
Right. And, you know, it's really going to depend on how they're going to open things back up. You know, are they going to ask for everything up front? You know, I really doubt that because, you know, you got to think, you know, what effect that would have on the economy overall. You know, especially a lot of these larger banks, you know, they control a lot of loans, a lot of mortgage-backed securities. If they started repossessing everyone's home, that would cause a huge downshift to the market, which is possible. But, you know, really, it's one of those things where we don't have a crystal ball. We don't know exactly how it's going to play out. But I mean, you know, hypothetically, you know, if we were able to pause time for this and just go about our lives and no time on the calendar would pass, you know, none of you know, none of that would matter. And again, this is a very non-professional opinion. This is just my thought of being kind to people. And really, I think that's the way it should go. Is we should just pause everything, like we can stop time. Obviously, you can't, but there's a lot of stimulus coming from the government, and a lot of it does go to banks, and, you know, it goes to the investment banks who are purchasing the mortgage-backed securities. So if the people who are supposedly depending on mortgages to profit are getting bailouts and getting stimulus, you know, it doesn't make sense why anyone needs to be collecting money on mortgages right now. I mean, it would be nice, you know, if you have the ability to pay, I think it's you know, perfectly fine that you still do pay and that you're expected to pay. But if you don't have the ability to pay, I mean, I think it would be you know, very unfortunate if you're forced to when you didn't have the ability.
Yeah, and we want to have you back and get more wonky and technical, you know, like about your professional opinion on all this as well. I appreciate you giving your opinion as, you know, just a human as well. But we're currently looking to fill out a panel in the future on what is capitalism as a more general idea. Preferably, we want someone who perhaps disagrees with you on some points, and has the qualifications too. What would you want out of a panel discussion like that?
You know, I would like to hear what someone would have to say for the small landlords who are not necessarily living in luxury and earning millions off of rent payments, who maybe their entire income might be based off of rent, where it's more than just paying back the mortgage. And, you know, now I'd say, you know, there is a little bit more of a case of what do you do there? Because, you know, now it's two people who are significantly disadvantaged by the system. And I think that's a fair argument. And you know, it's difficult to say what the right thing to do in that situation would be.
Well, if you think of any good panelists that we should talk to, I would love to hear from you on that. You know, but you know, thank you so much for coming in and logging into our what is this, Zoom?
We're Zoom right now, Jack.
That's the first time I've not been able to find the word Zoom in this discussion. Thank you for logging into our Zoom. Thank you, Haakim, for co-hosting. I'm Spartalknewztalk. Follow us at Detroit Spar on Twitter. Like and subscribe on YouTube and Instagram and wherever podcasts are found. And I will see you next time.
All right, sounds good. See you next time. Thank you, Jack. Thank you, Haakim.
Thank you.
Thank you.
All right, have a great night.